Welcome back. We have John Van Limbeek joining us from Abbott Wealth Management on this Wednesday. How are you doing?
Doing well.
Good.
Doing
Enjoying
well.
the sunshine?
Beautiful.
It is gorgeous
Yeah,
out there.
Yeah.
We are talking today about earnings season, and some of us know what it is. I don't know a lot, but John here knows a lot, so you're going to talk to us about it.
Earnings season is the time of the quarter that the companies, the publicly traded companies, have to report their financials. So you'll hear about it in the news a lot right now because the big businesses are coming out with that time of the year, basically, or that time of the quarter kind of thing.
So it's always the banks that we always, I know that when we hear about it, I often hear about the banks.
You hear about the banks, you know, only because maybe you're familiar with them, but all the companies do. So today in Canada had the report also, the gas and oil company, Magna International, the car manufacturing people. Yesterday was the Bank of Montreal and others. So you'll hear about all of them usually around the same time. Some come out sooner than later, but they have to do it every quarter.
So where are things at? Are there any notables?
Not really. I think just what I wanted to bring up was that the earnings will, I mean, it's important to listen to, or for us to listen to that. It's the value that the business, it contributes to the value of the business. So people will look at the stock price and say that's the value. Well, it's not. It's just an auction. It changes second by second, day by day. The earnings are really what the analysts are looking for. So you hear estimated earnings where they come out and say, okay, well, what do we think the earnings are going to be? And then when the company reports, they'll actually give the actual earnings. Mm-hmm. It's broken down as an earnings per share basis, so you can actually have a comparison about what people thought it was going to be versus what it is. Mm-hmm. So Royal Bank came out today and beat earnings. So they're at $1.67 versus $1.58 or something like that. It doesn't mean anything to the average person. It really doesn't mean anything to me either, other than they beat what people were thought. BMO was the other way yesterday, or Bank of Montreal. And again, it's just a snapshot of how they did for the last quarter. But the trend is kind of the bigger thing we got to look at. Are they making money? Yes. Are they making more money? Generally, you know, we want to see that go higher. Mm-hmm. And if that happens to consistently go higher, that business is worth more. Then the stock price will appreciate with the earnings appreciating or increasing.
Do you have some investors, though, who watch these numbers come out and then phone you and say, I need to sell all of my stock in the Royal Bank, or Bank of Montreal went down?
I'm not going to say no, put it that way, not for our clients anyway, but people do watch it, and people do put maybe a little bit too much attention to one number in 3 months kind of thing. And it's something to be aware of, because earnings are one of the key metrics of the value of a business. So a business that makes more money or earns more money is usually worth more money. That's as simple as it can be. There's other things that go in there, but really that's what you have to watch. And it just comes back to, you know, what's the value of a private business in Kamloops? Mm-hmm. You know, if it makes more money, it's worth more money. There's a couple other things you have to think about too, but that was one of the key drivers that we really have to at least watch. And if you see more of the companies beating expectations, that's a good sign, regardless of what the stock market is doing on the day-to-day or week-by-week basis.
True enough. We also want to talk about the fact that the RRSP deadline is coming up fairly quickly. It's usually at the end of February, isn't it? But it's been pushed over this time.
It's just Monday, March 2nd.
Okay,
yes.
So what can people know about that if they haven't contributed by now? Can they jump on the train late here and get it done?
They can get it done in the last week, and then you might have to come back in for another review just to do a more of a longer annual review. But yes, you can absolutely get it done in the last week.
What is the
I wouldn't
limit?
leave it till the last
No.
week, but you know, if you do, you still have a week to go.
Has anybody walked in on the last day and said, I'd like to put in
Yes.
$10,000 really quickly?
That always happens.
Okay, there's always a few stragglers.
Yes.
Different contribution limits for different income brackets, or how does that work?
The RSPs is basically, it's from you get notification last year what your 2014 would be on your notice of assessment.
Okay.
So it's based on 18% of your earned income from the previous year, plus any carry forward you have. Kind of
Excellent.
Thing. So
okay.
Most of us have a lot of room, but if you're maxing out every year, you got to pay attention to those numbers. You go over those numbers, you get a nice penalty of 1% per month. Yeah, so it's don't go over those numbers.
Okay.
You don't over contribute.
Indeed. We have about 20 seconds. We're about to throw to a break, but before we do, you're back with us next week.
Yes.
And we're going to talk dividends.
I'm going to come back and talk about dividends next week. This is the second part to the earnings season. So the Royal Bank came out today and beat earnings. They also came out and raised the dividend. by just under 3%. That's the powerful message I think I want to bring forward. What is a dividend and why is it so important, really, from a growth of the portfolio point of view?
Awesome. We will delve into that this time next week then, John. Thank you very much for being here.
Thank you.
All right, information on the screen, abbottwealth.com as well. If you have any questions, info@abbottwealth.com. We are back in 2 minutes with Tom Friedman. Stay with us.